Okay, good morning, everyone. I just want to make a quick adjustment here. This is Mark again, and I need to make a quick adjustment and then we'll get going. Okay, everyone. Welcome to today's Coffee with Mark. I spent a lot of time working on this intro graphic for you, so I hope everybody appreciates it. If you've been joining Coffee with Marcus, you've had a wonderful time and you've learned a lot and really made the most out of the last couple of weeks with Marcus. And this morning, you're going to have Coffee with Mark. Just as it was yesterday, Marcus is traveling to Singapore, and with the time change and being on the plane yesterday, and now with the time change and getting adjusted to that, is a little tricky for Marcus to join us this morning. So I said I would be happy to fill in. I had a blast yesterday. We did a little trading and talked about futures and day trading, and I thought it would be fun to cover a few other things in this morning's Coffee with Mark. So sit back, enjoy your cup of coffee, and we'll talk about what's going on in the markets. So first things first, if we take a look at the major indices here we have the S&P 500. We talked about yesterday how earlier in the week we got off to a kind of a slow start on Monday as everybody was trying to digest exactly where we go from here after some of the concerns with the White House and whether or not Trump's going to have the support that he needs to push through some of his pro-growth initiatives and also tax reform. And then after a great speech Monday night that was received well by many people, and then there was also an article saying that the tax reform proposal is they've made great strides with the Trump team, and so it sounded like tax reform, we're getting back on track there. The markets love these ideas, the pro-growth initiatives, tax reform by President Trump. That's why the market had made such a nice steady rise after he was elected, when at first it wasn't expected because people thought it'd be such a shock. You know, if you go back to the election, everybody expected Hillary to win, and they did not expect Trump to win. And actually, people were saying that if Trump were to pull an upset, the markets were going to tank, right? Because the markets like certainty, not uncertainty. But that was not the case, because once he was elected, everybody thought, hey, well, you know, some of his policies could be good for markets, regardless of whether or not you believe in his politics or support his politics. So Trump really, you know, whether you like it or not, or regardless of what side you're on, the policies of Trump or the potential policies of Trump has really driven the markets higher. So we start to have some things questioning whether or not these initiatives can get done, and there's doubt in the market, and then there's uncertainty. We start to see some of these bigger, more volatile moves. And last week on Thursday, we had the second biggest dip of the year. So this week, slow start. Tuesday, nice jump higher. Things are looking good. Yesterday, we were down again, and we're just trying to find some direction here. I have the PowerX indicators up here on my another charting software, just looking for trends. And you could see here that you have some, you know, nice moves higher, and there's these consecutive green bars, and then it's getting a little choppy with these pulls lower, some nice nice run higher with green bars, and then we're getting this choppiness again. So the market's trying to find some direction. We're alternating colors. We're not seeing this nice, you know, clean move. And Marcus has probably talked about with PowerX that we look for trendability with a stock if we want to trade it, because we want to see that there's, you know, nice trending moves in a particular stock that we want to trade. We want to see that there's continuation of trends and that it's not choppy. Right now, the market's trying to figure out what to do, and I would say that we've been very choppy the last couple of weeks because the markets are trying to see where we go from here. So yesterday we finished lower in the S&P. Dow, we were also lower. NASDAQ, we're lower. If we look at crude oil, we finished lower. Crude oil's getting a little choppy here, trying to, over the last couple of weeks, trying to figure out what the heck to do with the 50 mark. Round numbers in crude oil can act as support and resistance, and so we pulled away from that number. We're trading right around the 48 mark now, but crude oil right now showing the possibility to edge lower, down 1%. We'll see where crude oil goes. Also looking at gold and silver. These are some markets that I'm keeping an eye on today for binary options, see if we have a trigger. Gold's had a pretty nice run higher over the last couple of weeks. We see a lot of green bars here. And with our binary options, this is something that we keep an eye on today. Silver, similar. Not as nice of a move as gold, but moving higher over the last couple of weeks. If we bring up the economic calendar, let me bring this up here. So today, Thursday, August 24th, we had unemployment claims released in the morning at 8:30 Eastern time, and this number came out in line with expectations. So 234,000 claims. Forex Factory had the forecast at 237, so pretty much in line. This morning at 10 a.m., we have existing home sales being released, and we also see that the Jackson Hole Symposium is beginning. It's day one. And this is an event where you will get some speeches from central bank leaders. Janet Yellen will be speaking tomorrow, and Mario Draghi from the European Central Bank as well. So it might be something that could potentially move the markets probably more so tomorrow when we have those speeches. But that's why it's listed on the economic calendar here. That's why you also see tomorrow Fed Chair Janet Yellen speaking at 12 p.m. is listed as a high impact event. So there's a question from Joe about PowerX, and Kent, you mentioned that, yeah, it says that Markus is talking, and yesterday I changed that. It's by default, it says that here, just so there's no confusion and people don't think that Markus lost his East Texas accent. My name is Markus, and I am filling in for Markus today. I am head coach here at Rockwell Trading. I've been working with Markus for 12 years, having a blast and enjoying the markets. So you're not listening to Markus, you're listening to Mark, and I'll be enjoying this cup of coffee with everybody today. All right. So let's see here. Let's bring up PowerX because there's a question on this. ARDX came up as a buy. I was looking at this morning, and this one is a little tricky for me because I like the numbers and I like the trends on this one. But Joe, you brought up this big gap. When we see a big gap like that, especially one that's occurred relatively recently, I think it makes it a little tricky. And that's one of the reasons why when we're looking at the best stocks to trade, we typically look for a stock that has nice trendability, that trends nicely, where you have follow through in this stock. And I think that this stock, for the most part, is a nice trending stock. The next component is trying to find a stock that is not gappy. I know these are great technical terms, but not gappy is really just a stock that isn't gapping, showing significant gaps from one day to the next, because it's going to make trading a little more tricky. You're not going to get the fills for entries that you might want. You might have bigger losses. You might have a bigger gain as well. It looks like there was a nice move lower that we actually benefited from with that gap, because there was a sell signal and then a drop. But ideally, we don't want to see big gaps like that, and we want a stock that's fluid and also has some nice trends. So honestly, this is one to me that falls a little bit in a gray area zone. You know, sometimes it's not as black and white as we want it to be, where you see a stock that's just been gapping all over the place, and you know that that's not a stock you want to trade. Here we have a stock that trends pretty nicely, and then there's this one big gap. So I would say for conservative traders, look for a new opportunity. For traders that want to be a little aggressive, having one gap like that to me isn't as big of a concern as having multiple gaps. So kind of a judgment call on this one. I wish I could say, hey, this is just a great looking stock, but with that gap, to me, it's a little tricky. And the other thing too is there's always going to be opportunities, right? You know, there's always going to be opportunities. There's going to be opportunities tomorrow. There's going to be opportunities next week. So you never need to force something if it just doesn't seem like a good call for you. Okay, so there were a couple of questions. Question, how can I attend this seminar? And I don't know if that was related to another question, but if you're talking about coffee with Markus, you are here. It's just coffee with Mark this morning. And a question on the data feed for PowerX. No, with the PowerX Analyzer, the software is meant to be used to identify swing trading opportunities with stocks, ETFs, and options. And so we base all of our signals on end-of-day data. We provide the data for you, so you don't need to pay extra for data fees. There is intraday, but it's on a delay. So since the signals are all end of day, that is the most important data for us. Intraday is kind of nice just because you could see if there was a signal that was triggered. Okay, question says, with PowerX, if there's a signal to close, and I know we're kind of getting into software questions, but I think this is valid. Actually, you know what? I thought that today, yesterday we talked about day trading and futures, and today I thought, let's have more of a discussion on how you can improve as a trader, and this question ties in perfectly with that. So I'm just going to say 3 things that, here, let's make this big. 3 things that will make you a better trader. So we'll use this as the focus for today's coffee. And the first thing is always have an exit plan. So this to me is probably the biggest issue that I encounter with traders who have been burnt, who are inexperienced, or who have who've really not progressed as they might have hoped with their trading. And it's important to have an exit plan, right? Just the other day, I got an email that said, "Hey, I'm taking a horrible loss on," I don't know what the stock was, to be honest. Let's just say that it was Snap. Okay, so the question was, "I'm taking a horrible loss on Snap. How can I make my money back?" And I mean, this was a legitimate question. It just wasn't that stock. I can't remember the stock. So this is where, to me, the issue isn't what do I do now. The issue is I should have known what to do before I got into that trade, right? And it's always important to have an exit plan, have an exit strategy. Know where you will take profits, know where you will get out for a loss, and if applicable, know where you will get out if market conditions change, right? So an exit could be a profit target, when to take profits. An exit could be a stop loss, how much you're willing to risk on this trade in order to be right. And the next would be, you could call it a technical exit, and that could be either a time stop, like you're going to give it a certain number of days or weeks to try and be profitable. It could be technical. Here I could put time stop. To me, it's kind of the same idea. They're two different concepts, but either way, the idea is that you're not seeing the move that you wanted, right? So a technical exit would be like based on indicators. The indicators have now told you that the opportunity that you had is no longer, and it's time to get out. With a time stop, it's very similar in that enough time has passed by that you had given the trade an opportunity. Now, because that move has not happened, that opportunity really has expired. It's time to get out. Now, with our PowerX Analyzer, we have a profit target, and we suggest a stop loss. And then there's a technical exit, which is based on a crossover. So if you're using the PowerX Analyzer, and I think this came up recently with a stock. Let me go back here. So here we see sell to close. Okay, we had a profit target, we had a stop loss, but now we have a sell to close. That's a technical exit. So based on how this stock has moved, we just didn't have the follow through that we wanted. And so we're getting a crossover exit, and then the software is saying that we should sell to close. Since we were long based on that signal, we would be selling to close the trade, and with the software, it suggested that we do that at the next day's open, right? Because how the way the stock moves, instead of being this nice uptrend that continues and has strength, we haven't had that follow through, and so the software is saying, hey, it's better to get out now, move on to other opportunities. Okay, the question is at what price? We don't know what the market's going to open at, so it's not at a specific price. It's a sell to close at the open, right? If you have the ability to monitor the trade, you can try and work your order a little bit. If you're just trading end of day and you don't have the ability to monitor the trade, then it would be sell at market at the open. Okay, so going back to the 3 things that will make you a better trader, always have an exit plan. This is so important. It's really sad when I come across a trader that says, oh gosh, I wish that I had talked to you 5 years ago because I blew through $100,000 or $200,000. And this is, like, I'm not exaggerating, this happens. Or there was a trader recently that I was talking to, I want to say it was like $350,000 in 6 months. And that this trader did not have an exit plan, right? But that's how you can avoid those bigger losses. That's how you can take profits and not give profits back to the market. And that's how you can really manage your risk. Because if you have a stop loss, if you know when to get out for a loss, then you know that exit point is manageable for you. It's manageable for your account, and it's appropriate for your account, right? Because you're not going to trade, say, a $10,000 account and set a stop loss at, $500. That's why blow your account on one trade. But sometimes when traders don't plan for the exit, that's exactly what happens. They're hoping that the market comes back. They're hoping that stock comes back. And then we get emails like, hey, I lost a whole bunch of money on Snap. How do I make my money back? You're probably not, right? You should have got out a long time ago, and you should have known where to get out before you even put the trade on. Otherwise, it really didn't make sense for you to put the trade on in the first place. So having an exit plan is so important. I can't stress it enough. Not having an exit plan, to me, this is where I see traders take the biggest losses, and almost just as bad is they might be in a good trade, but then they take small gains, right? Because if you don't have an exit strategy and you see that the market's up a little bit, sometimes you're thinking, oh, I'm just going to take some profits here. This is free money, right? But if you're risking $20 on every trade and you're taking $1 profit, unless it's like that strategy I discussed yesterday where we've tested the probabilities, right? We know what to expect based on that winning percentage, so it makes sense to risk more than we're making on a trade because of the high accuracy. If you don't have any numbers to back you up and you start taking those small profits just because you're up a little bit, then most of the time that's not going to equal out to a winning situation just because you're risking way too much compared to the small profits that you're taking, right? Unless you've tested it, unless it makes sense, and unless you've run the numbers and you know the probabilities and it's a specific strategy. And in that case, you have an exit plan. You know what to do. You have your profit target for a reason. You've set your stop loss for a reason. So having an exit plan is so important. And this is what we do with the PowerX Analyzer. The exit plans are built into the software, right? With our day trading strategies, like the one I covered yesterday, the exits are built into the strategy, right? Those day trading strategies are covered in our Rockwell Trading Club. If you're a lifetime member, you can access them, but the exits are provided for you. With our binary options, we like to trade daily expiration. So we let that expire at the end of the day. So we have an exit plan. We know what's going to happen. It's either going to be a winner or a loser at the end of the day. Now, getting into the trade and the amount we're willing to risk on the trade is going to be determined before we get into the trade. So that's part of the equation with our binary options, but we do have an exit plan. We know when to get out, and that's based on the end of day probabilities that we have. So knowing when to exit is so important. I can't stress it enough, and it will make you a better trader if you make sure that you always have an exit plan on any trade that you place. So the next thing that's going to make you a better trader is screen time. This is another thing that, for me, I believe many traders overlook the importance of this. What is screen time? Well, if you're a day trader, it's focusing on the markets and practicing. If you're not at the level that you want to be, it's sim trading, practicing trades in live markets, or replay mode. Some day trading charting software or some charting software packages allow you to replay. But that screen time is going to be so important because it's going to reinforce your strategy. You're going to be practicing when to get in, when to get out, and then you're also going to have numbers because you can take those numbers that are a result of your practice and the testing and the sim trading that you're doing. So now you have your own experiences, and so we want to have our own experiences and numbers to base our, I'm going to say trading plan here. I know, like, if you're just using PowerX, it might not be as relevant because this is the kind of setup for you, but and numbers to base your trading plan on. So again, the screen time is so important because I could say, hey, I'm trading this strategy. It has a 68% winning percentage, and on average, I profit $25 a trade for every contract I've traded. It's a great strategy. Trading one contract over the last month, you're making $600 a month trading one contract, right? And it might sound like a great strategy, and if you have even a little trading experience, you might say, hey, this sounds like I want to do it. You're doing it. It's working out nicely. Those numbers sound great to me. And if I want to make more money, I just need to trade 5 contracts, right? So this is where the screen time comes in, because if I could give a trader the same exact rules that I'm using, but if that trader goes to trade it live, that's when the reality of risk hits and not having your experiences and actually your own expectations from that strategy, and then that creates doubt, and many times if there are losses, you lose confidence in the strategy, even though it might be a great one, or it might be the best strategy that you've ever learned or you've ever been introduced to. But if you don't have your own experiences and you don't put a little time in and get that screen time, it's going to be difficult for you to trade. And this happens all the time. This is a huge issue with traders because everybody wants to learn that next great strategy, that strategy that's going to put an ATM machine in your front yard. Of course, that's not going to happen, right? But there could be great strategies out there, but if you don't put the time in to learn it and to practice it and get your own experiences, you are going to struggle because we have no control over whether the next trade is a winner or not. We have no control. Even the best strategy can have streaks of losses, right? So if you think it's a great strategy and the first trade's a loss, you might shake it off and go, that's what happens sometimes. You learn a great strategy, of course the first trade's going to be a loser. Then you have a second loser, and then you're kind of thinking, well, this is odd. And then the next trade's a loser. You're down 3, and now you're panicking. You're wondering if you're doing something wrong, or you're wondering if you should just give up. Fourth trade's a loss. Now you've decided, I'm done with this strategy, it's stupid, and you're moving on, right? Well, if you've practiced that strategy and you see that, okay, 5 losses are normal, now 4 losses don't matter. and I mean, this is what happens all the time. So screen time is so important. If you're just working with a software that provides signals, like the PowerX Analyzer, paper trading is important, right? Because you don't need to sit in, like, that's one of the benefits of swing trading, is you don't need to sit in front of the computer staring at charts and practicing like you would if you're going to, a day trader, if you're going to be swing trading. But it's good to have some paper trading experiences. It's good to take those signals and paper trade them on a simulator. Someone said that this might be changing, but CBOE.com has a great trading simulator. It's under virtual tools, and if you are a PowerX customer, we have some videos on placing simulated trades there. So to me, if you're a swing trader, and the screen time idea doesn't make sense because you're not going to be sitting in front of your computer for 2 to 3 hours practicing in live market conditions, the paper trading would be the equivalent for a swing trader. Okay, so the third thing here, trade opportunities, not hunches. This is crucial. I have met very few traders that have done well consistently over time on hunches, right? I've seen a hunch turn into a great trade where it could have been the trade of the year for that person, but then they continue to trade on hunches and then they give back anything that they ever made, right? We want to trade opportunities, not hunches. And this is where you might have heard Markus or myself say, trade what you see, not what you think. This is important because you could validate a hunch by finding an opportunity, but you don't want to risk money on just a hunch. That's not trading. That's like going to the casino and looking at the roulette table and just putting $5 on any number. That's not an opportunity, that's the hunch, right? And just like the casino, most of the time, the market's going to take that money from you, right? So, I mean, this is where we're saying trade a strategy, right? Trade a strategy that's been tested, whether you're doing the testing or whether you're using tools that have been tested by other traders. If you're trading like binaries or even other strategies, know the probabilities. How often do you expect the trade to be a winning trade? In PowerX, it tells you over the last year, there are 50% winners, right? Or 60% wins. With our probability table that we have with our binaries, we have the probabilities that if the trade is triggered, by the end of the day, we will close higher or lower. So we're trading a strategy. We have a method that we could test, that we could evaluate. And this is important too, because with a strategy, we're finding opportunities, but we can put it to the test. If it starts to outperform, if we do better than we expect, nobody's complaining, right? But if it starts to underperform, we want to put it to the test and we want to figure out what's going on. If we are just trading hunches, we cannot test hunches. Like, they either work or they don't, but we can't improve them, right? With opportunities, we could put it to the test. If we have a strategy, we have rules for identifying opportunities, and then we have our exit plan, and it starts to underperform, it does worse than we expect, we can put it to the test. We can see if our numbers have changed. We can see if there's something that's holding us back. And we can see if there are things that we should do to improve the performance. That's just not possible with hunches because there are no rules. And you're taking something that is more strategy driven, that is rules based, to just hunches that where you're going by instinct and not really having any validation for a trade, and so it's impossible to recreate and it's impossible to put to the test. So these are three things that I've seen hold traders back all the time, and I just thought it would be a great talking point for today's coffee with Mark, because I see traders losing money and being held back by these three things. And I think that traders who are committed to always having an exit plan, committed to putting in the screen time and work necessary, screen time definitely for day trading, for swing trading, even just paper trading to learn an idea and to get comfortable with signals, and then also switching from hunches where you're just going with your gut and hoping things work out, instead always focusing on opportunities and having a strategy that leads, identifies those opportunities. That's going to help you as a trader. So with that said, I know that there are a few questions that popped up, and I thought we'd take a quick look here and see if there's anything. So Dennis had a question about PowerX results for the day. Dennis, the one thing that I would suggest is to take a look at your settings and see if you're using fixed risk or percent risk, because depending on what you're using there, the results for the next day's signals could be slightly different. It doesn't matter. It's not in a bad way. It's just how the ROI is calculated. Okay, there was a question for the difference between our Neuro Analyzer and PowerX, and I could tackle that real quick. With the PowerX Analyzer, the software is really meant to find trading opportunities. So Markus and I run the scanner each day, and we look to identify what stocks are providing signals for the next day that have moved nicely in the past. And so we're constantly getting new opportunities with PowerX. Neuro Analyzer is a little more complicated. There's a little more work involved in getting it set up, where with PowerX you could really just click the optimized scanner list and have stocks for you that day. Neuro Analyzer, you have to set up some models, and it's cool software. But with the Neuro Analyzer, it's best if you have a group of stocks that you want to trade and you're looking for signals, right? So if you love trading Apple and you love trading Chevron, let's say, and you say, I don't want to find new trading opportunities and new hot stocks, I want to just trade those two stocks, then Neuro Analyzer is probably a good fit for you. Question about using PowerX for currencies, and PowerX is for stocks, ETFs, and also options. So it does not connect to a Forex or futures feed, but you can, if you'd like, use currency or commodity ETFs and see if that can help you provide signals. But it does not connect directly to Forex or futures feed. Okay, there are a few questions here, and I think that some of these might be best if you send them to us because they don't really apply to the I mean, they're good questions, don't get me wrong, but I think it would be best if we just wrap things up so people could go on with their day. And if I didn't get to your question, then shoot me over an email, support@rockwelltrading.com, and the support team will put it in my folder or help you directly if it's an easy question. Okay? All right. Well, hey, thank you for joining Coffee with Mark. It's been a privilege and pleasure to be here. Thank you for putting up with me for 2 days. I know you're used to Markus, and Markus is always fun to listen to. But it was fun for me to fill in, and I hope over the 2 days you had a fun time and had a slightly different perspective on the markets, even though the fundamentals and the foundation there is definitely going to be the same between Markus and myself, because we've been working together for quite a while, and also because we have the same beliefs when it comes to trading and how to improve trading and help traders. So that's going to do it for today's Coffee with Mark session. Markus should be back next week, ready to go, and enjoy the Coffee with Markus in the future, and I'll try to pop in every now and then too, because it's been fun. So have a great trading day, have a great rest of your week, and have a wonderful weekend, and happy trading. Take care, everybody.